All right, Jeffrey Meyers. How you doing?
Travis, how are you?
I'm good, man. Exciting stuff to talk about, but you just had a major shift in your business. So maybe let's start with like what's happened. Where are you now? Can you share?
Sure. Yeah. For one, thanks for having me. Always good seeing you, buddy. So yeah, I, after a couple years with Cross Country Mortgage, have left and have joined Certainty Home Lending, team here locally in the area. Great team, really recognized as one of the really top performing offices here, and super happy to be a part of that.
It's awesome.
So, yeah.
It's a good move, dude. Cool. So, yeah, new brokerage. Exciting.
Very similar,
Exciting
as far
team.
as far as the products and everything. Super similar. It's just the team, the support, the ability to grow my business, help support, you guys, all the realtors out there, and your lovely clients.
Cool. Well, today we're talking about some new news from Fannie Mae, Freddie Mac about multifamily requirements, specifically for down payment. So maybe we start just by telling people what's changed.
Sure. So, as Travis said, and Travis, you have such a good podcast voice, by the way. I think I got to work on mine.
No, you're great.
I think it's the placement of the mic, but
it's all technique.
It's all technique. Super exciting. Yeah, as Travis said, loan to value limits for multifamily 2 to 4 units have decreased from 15% for a 2 unit to 5%, and previously, before, for your 3 to 4 units, we had to put down 25% for a down payment, and that is now only at 5%.
Okay, so basically any multifamily,
you
can put 5% down. So what does that do? That opens up the opportunity for, because I feel like previously it was largely investors who had that kind of capital to get in the game. And now I think for, folks considering house hacking, maybe they're looking at the primary residence, which is part of the requirements on this. They can get their foot in the door, which is huge.
That's my biggest takeaway is for our first-time home buyers, someone who's never purchased before, just trying to get into the game. It's huge. It helps them with their qualifying. We can talk about that. We can use the rents to actually help them qualify for the purchase. But coming up with 5% instead of 15 or 25% is huge. So,
Maybe let's start here, because I think folks in the know might say, well, yeah, but Jeff, FHA was already an option at 3.5 down. So how is this any better? We were just talking about this a little bit before we started recording. Can you explain what the difference is and what FHA was requiring?
Yeah, so with FHA, we had to pass what's called a self-sufficiency. So the property basically had to cash flow. So we could put 3.5% down, something we could do before, but with interest rates going up this year, it was something that was nearly impossible, especially in our area. I had a few opportunities to try to make some work, and it just didn't work. The properties were just not cash flowing at 3.5% down with our current interest rates.
So what were you finding you'd have to put down? Is there like an average number that was getting it to cash flow?
It just all depends.
Okay.
And really, like I said, right now, there wasn't a whole lot of stuff cash flowing, even at like 20% down plus. But you could always make it work, but not at 3.5. That was the big thing. People didn't want to put 20% down.
Yeah.
They want to come in with 5, 3.5 if possible. A lot of investors I know would still want to come in with only 3.5% down. But it was nearly impossible.
So with this new program, you can put that 5% down, and it doesn't need to cash flow, correct?
Does not need to cash flow. That's the big thing. So
Sweet.
There's no restrictions on if the property cash flows, or if it hits certain as far as maybe hitting 75% of the income, or they like to hit 100% sometimes, as far as the investor likes to see that on maybe a DSCR loan. But no, there is no restrictions on if the property cash flows or not.
And obviously you can put down more if you wanted, but I think again, there was like a barrier to entry kind of a problem. And so now it's like, you could put 20 down if you wanted, lower your monthly payment, but problem was a lot of folks didn't have that. We're going to get into some numbers, but just like that barrier to entry has been reduced, I'll say, so that's great.
That was the biggest thing I was seeing, was that people wanted, and they had the ideas of house hacking, educated by their realtors, hey, this is a way that you can help, offset your mortgage, but coming up with, over $100,000, we'll get into those numbers later, was tough for a lot of people. So this is just, every call I make for those, particular clients that I know are looking for this, they're just thrilled. It's November 18th too, so right around the corner here.
That's when it's effective?
Effective November 18th. So you can actually get
an escrow now
today. Yeah, no, you could. So
call me. Let's get into escrow.
Yeah, let's do it. Let's do it. We can make it work today, so that's exciting.
Cool. So let's look at SLO County specifically, because I ran what's on the MLS, and inventory just in general is a massive problem right now. And so, multifamily is lean. There were 6 multifamily units available in SLO County today. So there's not a lot. So, this is going to be an opportunity that's just like abounding for everybody. There's still just like not a ton of inventory, but we want to give you guys some insights on what it might look like if you were considering this down the road. So we pulled 2 examples. One is and these are active on the MLS as of the time we're recording this. So you could look at them. 528 Creston Road in Paso is a duplex, and then another duplex at 110 Koyama in Pismo Beach. So the 528 Creston is listed at $675,000. The 110 Koyama in Pismo is listed at $1,595,000. So we want to give you some different examples. So let's go through the one on Creston and just give you some real numbers. So here's the details on this one. It's 4-bed, 2-bath total. So each unit has 2 bedrooms, 1 bath. 1,664 square feet total, 7,200 square foot lot, built in 1953. So again, $675,000. So let's run the scenario, Jeff, where you put 5% down, and that makes a loan amount of $641,000. Interest rates are like all over the place right now. So it's like they're up, they're down, they're sideways, but we're looking at like 7.5 is the number we're using right now.
Yep. That's what we use, 7.5.
So what does that mean for your monthly payment all in?
So looking all in, 7.5, as Travis said, percent interest rate. Right now at 5% down, we're looking at $5,200 a month with taxes, insurance, and principal interest in there.
Okay. So $675,000 is like actually a pretty low purchase price. I mean, we look at the average single family, actually average all in SLO County is something like at 8, maybe 50, somewhere in there. 800. So this is below average. So this is, may or may not be a good example, but just to give you guys one. So, okay, $5,200 a month. That's your payment. Now, the advantage is if you're doing a house hack, you can rent one of those units out. And I'm using $2,200 a month rent. So that's probably conservative, but let's say $2,200. That means that what you're responsible for is $3,000 a month.
Correct.
That's doable. Yeah, and that's at 7.5% interest rate.
Yeah. We were just talking about it, trying to eat a $5,200 a month payment is not attractive to a lot of people, but you say $3,000, I can do that.
Yeah, I can swing that.
Swing, $3,000. So yeah, no, it's a huge, it's a game changer as far as being able to rent one of your units out.
Yeah. Let's just compare that same property to more of a conventional loan where if you exact same numbers, you just put 20% down. Mm-hmm. So that makes your monthly payment go from $5,200 to $4,500. And then minus the rent, you're looking at $2,300. So you're saving $700 a month there. But here's the kicker: is you have to come up with $135,000.
Yeah,
compared to what?
33, just over 33,000 for the 5% down.
Yeah, and so you were saying, Jeff, it's like you could call grandma, well, not my grandma, but somebody has a grandma that could give them $33,000.
Yep.
Right? But like $135,000, that's a different ballgame.
That's huge. It's huge.
So this is a really cool strategy.
Well, when you look over $100,000, I mean, if you like I said, it's easier to come up, save, make a plan for $30,000. I've helped people make plans for down payments, but when you're looking at $133,000, $135,000, that's really a huge plan that you have to do over, a time, that's really something that you really have to game plan for over a long period of time.
Well, and this is why we always encourage people to work with folks who will help you think big picture.
Totally.
Get a great lender like yourself involved, get a financial planner, CPA, have a team around you, because you're talking about a difference of $100,000 in just your down payment. And it's like, yeah, you save some on your monthly payments, but it's $700 or so. What could that $100,000 do for you? if you didn't have it tied up in an asset like this, could you invest it in another one? Could you put it in the market? There's all kinds of stuff you could do.
Yep.
You could use even some of sometimes people have cash on hand, but they're a little bit worried about that monthly nut. And so you could just pull from that reserve too, is another thing we've seen people do, is you have $100,000 in the bank, and then you pull to make up the gap between what your monthly payment is and what you can afford until such a time as you can refinance into a lower rate, something like that. So the point is, you just think smartly about the big picture and what you're trying to do, because now all of a sudden you've got $100,000 extra.
Totally.
If you had that 135 in the beginning, which most people don't. That's why the 5% down is helpful.
And just having that reserve too is, I know, something that a lot of people want. I want this much cash on hand. So being able to combine that with just a little bit more of a monthly payment, but then offsetting it with that rent is really a win-win.
Well, especially in a multifamily, because, you need to look at what you might be, now you're a landlord, and so you need to have reserves,
exactly.
So anyway, whatever that is. So
you
anyway,
might be able to invest back into your property,
exactly.
Charge a little more rent, which is putting more money back in your pocket. It's, there's a lot you can do with that.
Totally. Anything else on those properties you wanted to mention before we go to the next one?
No, I think we hit it.
We should do the Kiama one. Just it's a little bit of different ball game here, but so again, 110 Kiama in Pismo Beach is a 4-bed, 4-bath, so it's a 2-2 in each unit, 2,400 square feet, 4,700 square foot lot, built in 1980, and it's basically 1.6 million. So at let's do first. What's 20%?
I got it right here.
What's 20% down on 1.6? Math.
All right, so 319,000.
Okay, who has? Unless you're like a crazy investor, unless you're Jeff Meyers.
Yeah, come on.
$300,000 down on 20%. So
compared to 5%, which is just under 80,000, 79.
Okay,
yeah,
that's doable.
Totally. Especially looking at this price range, as far as what the other unit's going to rent out at, you're probably looking at. So we put 2,800 here. So
yeah, conservative,
yeah. Mm-hmm.
But yeah, so that makes the loan amount 1.5. Again, so this is 7.5%. There's also we don't talk about buy downs, and there's all kinds of, don't get horse blinders on with interest rates, people. I get it, but
that's a whole other podcast.
It's a whole other podcast.
Totally.
But the monthly payment is a little bit intimidating. At 5% down, it's $12,000,
yep.
right?
Mm-hmm.
So you back out about $2,800 for rent, you're looking at $9,400 a month.
Which is a little more doable, but still,
it's high.
That's a big one. But when you're comparing, if you're looking at that price point, that's something that maybe a lot of people, investors, are looking at second homes, having that offset, maybe here on the Central Coast, living, or second homing one of the units, and then, we're going all primary on this. So sorry, I'm gonna eat those words right now, because everyone, we're talking about here, 5% down is just for primary residents. I don't think we hit on that. Mm-mm. So, but just being able to offset that rent in any ways is huge. So even if it's a $3,000, looking at $12,000 compared to $9,000, it's still a big difference to an investor or someone at that price point.
Yeah, absolutely. So the affordability is a major problem, especially on the Central Coast, man. It's the average, I was just looking at the data this morning, the average home price in America is somewhere around low 400,000s, I think. Mm-hmm. So in SLO County, it's double that.
Yeah.
So it's really tough. Jobs, well-paying jobs can be hard to find around here. So affordability is a major question mark around here. And I've got so many people who are friends even who are looking to get into their first home and are willing to house hack. And this might open up a door for them.
And you also can put an ADU on this property too and rent that out. I know getting in, I'm not trying to get off topic here, but I heard some new laws pass as far as being able to separate ADUs and sell them off as a condo situation.
Oh yeah.
Not sure if you heard about that, but tons of potential for one property to be able to really house hack it and have a multifamily income producer.
Yeah, cool. So, not the solution for everybody, but for some, this could be a game changer.
Yep.
So anything else you want to say about that?
No, I'm just super excited. When I first heard about it, I thought, a ton of my, pre-approvals just jumped into my mind. I couldn't wait to let them know. So it just really opens up the door for those first time home buyers. It's super exciting. Really being able to come up with 5% instead of that 15-20% down. It's just gonna let people be able to enter in on home ownership and get helped out by there's renters next door, which is great.
It's awesome. All right, Jeff. Well, hey, I didn't prep you for this.
No.
So this is all going to be a surprise.
Is this take one? This is, I thought
this,
we were,
no. This is it.
Practice.
No, this is it. So we end every podcast episode with 4 questions that are like, let our podcast listeners get to know you a little bit better. So this is going to be off the cuff.
Okay.
They're not going to be difficult, but you ready?
Let's go.
Question number 1. What is your favorite book, movie, or TV show?
I would say, gosh, I got to go back to TV shows. I'm a huge Entourage fan. I'm not sure if you watched that growing up. Yeah, that was, I honestly sometimes rewatch that, just have it just running on. Yeah, I'm a huge Entourage fan.
Okay, good. Question number 2, who is the most influential person in your life?
Oof. Wow. I'll have to go with my mom on this one.
Okay.
You know, she's just a rock for me no matter what I'm going through. You know,
Awesome.
She's just always been there. Selflessness, you know, is something that, you know, learning that from her, she's always put us first, you know, and yeah. My
Moms, dude, they're the best. Okay, question number 3. Describe your ideal day on the Central Coast.
Wow. Okay.
Full detail. Especially food, because that's all we care about.
Here we go. So I'm waking up in Shell Beach because that's where I live. Probably going up the street, the Steaming Bean. I'll shout out a couple businesses. Steaming Bean. Driving up the coast is something I love to do. You know, my family, we have a cattle ranch up in Harmony, so I'm trying to get up there as much as I can. Let's drive up to Cayucas and have a little food at, oh my God, I'm gonna blank on the place now, right on the corner. The Hidden Kitchen. Have you been there yet?
I haven't been.
Oh my gosh. Well, we'll go up there a little road trip. Hidden Kitchen, you know, spending some time at the beach with family, fishing at the ranch. You know, we're big into fishing in the lake and off the ocean there. So, and then maybe heading home. You know, sunset dinner somewhere. Let's say up in Cambria. Let's go to Sea Chest up there and have a little dinner. You know, hanging out with some family and friends, or barbecuing at the ranch. You know, those are the days I love.
Killer, amazing! What a day! I want to join you for that one.
Let's do it.
Okay. Final question: what is the best way for people to get in touch with you?
Best way is to call me. You guys, please call my cell phone. Feel free to reach out. You can call, text 805-440-9006, or I'll give you my new email.
Get ready, people. This is a long one.
I just gave it to Travis for the first time. So, yeah, maybe we'll work on this. But Jeffrey.Meyers@certaintyhomelending.com.
I'll put it in the description.
805-440-9006. Also, I'm on Instagram. You guys can find me all over.
Yeah, cool.
Facebook, everything.
Yeah, Jeff, that was a super helpful conversation. I think this is a really cool program. So super glad they made this decision. It's going to help some people, I think.
And we can, like you said, we can get into contract now as long as we're closing after November 18th, which is my birthday, by the way. So
hey, that's why they did it.
Yeah, exactly.
Cool.
Yeah, I had a little pull in that. No, but yeah, no, it's super exciting. So, you know, I'm talking to already a couple people. We've actually ran some numbers on Crescent Road before, so I'm excited to see if we can get someone in there.
Heck yeah. Love it. Jeff, thanks so much, man. Appreciate you.
Thanks, Travis. Appreciate you.
Awesome.
All right.